Anyone catch this?
I missed it.
You did, huh? Yeah,
I saw it when I woke up. I was like, oh, there's an engulfing on the 1 hour.
yeah, yeah. You could
Yeah, I
catch a
caught it. Paper
yeah.
trade.
You could still catch a 1 hour engulfing. I mean, the reality is that Bitcoin moves so big that even if you're late, it'll still move. You just got to be mindful that they're gonna have a, what's right here. I used to trade gold like this. I'd wait for a 1 hour or a 30-minute engulfing.
I picked up like when I was when we were a little bit higher at the 50, oh sorry, 64
Uh-huh.
around there, and then again the second swing, the smaller swing. I was like trying to find entries on the 5 minute and 15 minute, and
Mm,
I was finding that like um, a lot of times they don't work out on the
mm-hmm.
smaller time frames versus the bigger time frames.
Uh, so 64, you try to figure that out. You caught that for a sell?
If you know what I mean.
Did you catch that on a sell? So you caught that?
I caught the break in the retest at like 61K.
Oh, right here. Yeah, nice.
Yeah.
Yep, that was a good one. That was definitely. Let me see. What does that look like on a small time frame?
Yeah, and I caught it like I think on a 5 minute or the 15. I love the 5 and the 15. I can see everything kind of like
Yeah, yeah. That's good. You're working that 515. You seen that,
yeah.
huh? Yeah, right there. Boom, boom. Right.
I seen the W forming. I just wanted to make sure, so I waited for like the break and then the retest.
Nice, nice. On a small time frame. There's your SMS, your BMS. Boom. Right.
Yep, I got in on that retest when
Yeah.
it pulled back.
Very nice. Yeah, it didn't come back to the order block, but it was pretty close.
Yeah.
Well, good to hear. I caught that too, and then I ended up exiting it out early accidentally.
Sorry, I just got back. My internet cut me out.
What is it? Repeat that.
My internet cut me off. I just joined again.
Oh,
What,
okay.
could you make me repeat that again?
Yeah. So let me see. 60210. I got in here. Six 602 60210 here on that SMS.
Wow, you called it super early.
I did, and I'm going to tell you that, and the reason why is because of this. This was my telltale sign. See this? One, two, three. That's why.
Hmm.
That was my telltale sign. If I had missed this, I would have waited for the break and retest because that's my bread and butter
Yep.
right there. But I caught it really early. But this was my telltale sign. I like it when it hits three times. Hits three
Hmm.
times on a support, and there was also see this right here. Let me. Oop. Huh, that's interesting. Won't give me any further back. Yeah. So this here was the bottom of my fibs. Let me drop it to the 1 hour. Okay. So this is the 4 hour right here. Uh, someone was asking about the oh, it was Richard about ETH. That's right. Um, so here, this is um, this. It's not that clear here. Hold on a moment. See, this is why I like trading view because I get to play with the size until my eyes can see it clearly. You know what I mean? It can't do that with MT4. You kind of can do it with trade think or swim, but this here where I could do this because I'm really trying to catch. Because what throws off the eyes is, I explained this to you guys before that when you see this, right, it's the slow and steady rise. When you see this,
Yep, sideways movement.
yep, you have to visually see it as if it's sideways movement. That's right. So, and that's why I like to. Because that is the same as that. What it is accumulation, right? It's just this, but it's accumulation, but it's just slow and steady, and
Yeah, that
that
made
can
a
be
huge difference in laying down my fibs when you pointed that out, that like really helped
yeah,
when it came to laying down my fibs.
yeah. So take a look, right? Here's a breakout to the upside, right? And then this would be the slow and steady, right? So here's a new breakout. Started here, breakout, breakout, pull back to this order block, and then again slow and steady. So in reality, you could box this off here. So let's take a look when that slow and steady ends. There it is right there, because you see that breakout above, this breakout, this impulse right here, this green impulse, consolidation, green impulse.
Yeah.
You see it? So that's what where you have to learn to see this. Okay, so why am I showing you this? The reason why I'm showing you this is because this is where I recognize the bottom of my fibs, just like you said, Rob. This is the bottom of my fibs. This candle, because it came back to pull back. This there was basically a stop hunt to this um, order block, and in reality, this order block. I always tell you guys, order blocks make pushes. This order block made this push. Consolidation. This is sideways, right? And then made this impulse. So you actually have, so this order block here made this impulse. So now I was asking, okay, where do I put my fibs? I could put it down here, and someone had mentioned that, where do I put my fib? And they mentioned this deep, and I was like, I don't know if price will go down that deep. It could. It could because of this. This was a zone flip here. Do you guys see this? This zone flip right here, right? This, you could call this a block of an order block to a larger rise, but this was support. I'm sorry, resistance, and it broke it. So you could make a case for that, right? Where this could be the, or even this candle right here. But I said, before it drops to this level, I need to pay focus on this level here. That's what I was doing. All right, guys, make sense? You could even drop the fib down to this candle here, this order block, before the push that created this sideways accumulation, this range. So this was but to go down here, that's really, really deep, which it could go down there, but it is very deep. See, the reason why I'm saying this is because There are positions that need to be protected, right? Whales institutions will protect positions in the situation. This here was a very large pullback, right, to this. So for this pullback to occur, there are a lot of buys right here at 53. And I was looking at it as an area of liquidity that would seek to be respected or protected. Okay, that's the reason why. And then, of course, we had our breakout. So we're still within our 50 range, right? Even adjusting this accordingly, which is the order block that created the impulse. So even at that rate, that this fib at this place here was okay because we're still within the 50. So every time price drops into this range, I'm looking for a buy. And it was nice, it broke above it. Okay. All right. Any questions on this stuff here? I hope you guys catch that. And you have to look at enough charts that you could start to get a good visual on it. What's going to happen is this. So you'll see this impulse to the upside. This is this. Then you have this happen, right? Boom, boom, and then you had another slow and steady to the upside.
Where do you have your hourly fibs laid down right now, Jules?
Hourly fibs. This would where currently where I have this. This is my hourly right there. This is
Okay.
my hourly right here. You could
Oh, okay, yeah, I thought that was a 4 hour.
you could do this because this this stop hunt. But if I were which of course you're still within the 50, and this is where I had it when I was making a decision to find an entry. This is where I had it, right there.
Okay.
Yeah. But what the telltale sign for me for that entry that I got in was really this. This is why I got in super early. And the reason why I got in super early is because, and I've explained this. Mike, is Mike here? Mike.
I'm here.
Okay, nice. Mike, so I've explained this, and I'll explain it to you guys that when I see three hits, right? Here's the support. This is the initial stop hunt, right? Right there. But we're coming back, and I see three hits. These three hits, this third hit. Once I seen this, the reason why I got in super early, Rob, is because I have a tight stop loss. That's the only reason why. Right there. My stop loss is literally right here. Right there. Yeah, that's the reason why I like it. Now, let's say he drops below it. If and also this SMS, but it really my telltale sign was right here. It was all within a recent occurrence, right? So let's say, for example, that he was building support but broke through it. I would have then waited for break a retest, right? Just like you did, Rob. Or the other option is, okay, how far back will he go? This would have been my answer right here. He would have brought it down to here, down to this. Now watch, let me go to the 1 hour here. All right. Let's take a look at that really quick. If price did come down to here and he broke this, my question would have been, okay, let me go to the 15-minute and where's the order block? I'm looking for order blocks on the 1 hour and the 15 to determine how deep a pullback will be. All right. Okay, right there. So here's an order block right here. See it? Right there. Now, if I end up catching it on an order block, many times I'm waiting for an SMS or a confirmation candle before entry. I try not to enter in on exactly the pin, on exactly the very bottom, only because the order blocks are treated different than when they're doing 3 hits to the bottom. It is a possibility he could have gone down deeper. The challenge is that if I ended up getting into here, I might acquire a loss, and then next thing you know, he'll drop it here, and I acquire another loss, and now I'm 3 losses deep. So then I have to definitely wait for break and retest. When I get 3 losses in a row, typically I am waiting for break and retest because I'm saying, okay, enough's enough. I've acquired about approximately. I'm usually getting about $200 on small losses if I'm watching the 200 to 500. If I'm watching the 5 minute candle, all right, on a
That's not bad.
yeah, they're really small because I'm watching the 5 minute candle and I'm watching for it to continue to go down, and then I'll just exit manually. The only time I really get higher losses above that is if I'm away from the screen or I put a stop loss in place and it triggers it because my stop loss is slightly deeper than me visually getting out. So take a look. If I like, again, order block, I like to wait for confirmation. If we ended up getting this, right? Um, look, let's say here's price, right? Coming like this. Boom, 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 and then he goes like this, and then drops down to this order block. I'm going to wait for a confirmation candle right here before an entry. Or if, let's say that he came, tested this, and went deeper, right, and then actually hits this because of this support here, he'll probably go like close to it, right? I would have gotten in at without confirmation candle, without waiting for a SMS. I would have gotten in here with the anticipation is that this will hold and this SMS will follow. Or he might just straight away. That's how I'm treating these candles that wick deep, that are very well defined. You see, this is defined, this is defined, this one is defined, this one's defined. But you notice this right here, right? Here's the test. Look at all the activity it did, right, before it actually came and broke it. So it was a lot. And look at how high it went. This is definitely where you can catch 50 plus, right? Your stop loss is moved to break even. You catch 50 plus. In fact, let's count it. Okay. Again, the reason is because how prominent of a stop hunt this is. And it's a well-defined, especially on the 15, this is a well-defined move right here. See it? Accumulation, boom. Accumulation, accumulation, boom. And then it's the slow and steady rise, boom. So you've got this, you've got this, and you've got this. So when I'm playing these again, I'm literally waiting for the test, and I don't wait. And keep in mind, the test doesn't have it doesn't have to be exactly. It will be very, very close. You drop it to the 5 minute, right? In fact, let's just look for this in the 5 minute. Okay. See, he took off quick. Didn't even give you a chance to evaluate a good 5 minute. Just pinned it. So when this is the 15 right here. I'm sorry, the what we were looking at on the 15. This is the pin, right? Here it is on a later date, very well defined. I don't wait for this thing to actually get to it, because it's many times it doesn't get to it. It'll get close to it. In fact, there it is right there. Let me show you something. A long time ago, I had a question come up, which was, do you wait for the how do I know when I'm looking at a break and retest, whether or not it's going to be the, in fact, let's go to present time right here, and then we're going to go back to this, because this will make sense. All right. Someone had asked me, how do I know if on a break and retest, if you're going to be grabbing a pin, the wick, or the bodies, right? And that all depends on the context. This isn't a clean break and retest. And this is very, very detailed question, but I'll show you. Everything comes down to context, right? So in this situation, you have a prices coming up. Here's your break. Here's your retest, right? If you had a series of accumulation buildup, right, where it was like this, and then you had one which was pinned high, and then the rest were a series, right, and then it came down. The question was, do I look at the wick, or do I look at the bodies? Am I paying attention to the accumulation? Everything is in context. If I see a wick all by itself like this, I'm going to be paying attention to the wick. If I see accumulation with one wick, I'm going to be paying attention to the top being the accumulation. Okay, that, and to be a little more visually precise, you'd be grabbing the tops in general, all these tops. And when price lands in this area, that's going to be your entry for break and retest. So as far as this top of this wick being the determination on your on the break and retest, it's more of a, where's the liquidity? So if I had just one pin that went up to here, then that's my liquidity, not this. Does that make sense? This is my liquidity, right? So the reason why I'm bringing that up is because, see this right here? You had a pin. If this pin was all by itself, right? And then you had an engulfing, which you don't. You have a doji next to it, and this doji was was inside of this pin. I would grab. You see that, how it just overlapped? So in reality, it is the doji wick overlaps this long wick that pushed down right there. So the area of interest is actually going to be not the bottom of this, but it would be part of this wick here. So if you notice, this, it grabs at it. And again, you want to ask where the liquidity is, not exactly where the pin is. It's liquidity. It's really, it's what we're looking for. Where's the liquidity? So see, and it grabbed at the liquidity right there. Price grabbed at this when it came down here. It grabbed at the liquidity. All right, so going back to the question 50 plus, you've got an entry, right? Super tight, simply because it's grabbing at that support pin, right? So my entry would be very, very deep. If I'm watching this, I'd literally enter in, trigger it once it gets super close, especially in this area. Here's your 50 plus. You're already moving in profit, you know. So now we're on the 5 minute, and you guys know that I'm looking for price action. Here's your higher low, pull back, right? It didn't come down here to test your stop loss. Just came up, higher low, and then broke up again, right? And this is 170. Once I start pushing it above 100 pips, 50 very secure with, remember that, very secure. Here's a pullback, which is your first order block. After your first order block, you want to be paying attention to your next pullback for the next order block pullback. So here's your next one, and here's the third. We're staring at the 5 minute chart too, guys. All right, so watch. Enter here, first pullback, order block 1. Second pullback, order block 2. You're at 119 pips, 172. There's pullback 1, pullback 2. Now take a look. The visual tools that you use to get in will be the same visual tools you use to get out. And you want to secure profits. You're above 50 pips. So it's time to secure the profits. What do you have? Take a look. 1, 2, 3. That's a 3-bar swing. On a high time frame, this is railroad track. So you want to exit. So if you exit it out here, let's take a look. How many pips would have that been? All right. 139. You didn't catch the 172, but you caught it at 139. So you'd be 100 plus pips on this first move. Now what do? Now we're moving the stop loss to break even, right? Because this would have been our stop loss right here. Super tight. Why? Because you're going to be putting it literally under the pin hammer way over there on the left, just underneath it. And the depth of it is only going to be based on your spread. So you've put it, exited out here at 139. Now you're moving the stop loss to break even, or you could even move it right up here, just underneath the first order block. If price takes off to the upside, hooray. If it breaks down, you know what? The reality is that you've secured more profit here on your second leg, and the market maker has other ideas other than what the thesis you've developed. Okay? And then, of course, you could visually see it. I mean, look what happened. There was accumulation, right? And then, of course, rise, pullback. So that's it. I wanted to catch questions. Let me see. I know Richard had a question. Let me go back to it.
What's up, Julius?
Hey, what's going on, man?
So, man, I'm driving. I just had to listen, so I'm just trying my best to keep up.
Oh yeah, absolutely. We're gonna look at that ETH. All right. Let's look at ETH here. You know what? Let me let's go back to Bitcoin for a moment here. Let's see. Let's had a bit of a learning lesson on this Bitcoin here. My entry again was super deep, 60210, right? Um, so that was my entry right there. My stop loss. This was my initial stop loss. So when I had gotten in on this, right, my exit was 62002. Let me mark that off. Oh, all right. So yeah, my exit was here, somewhere here, during this accumulation period. Um, I like this break and retest. That was really clean on the 5-minute chart, Rob. That was a good one. All right. So
Yeah.
here's this is my entry, right? All right. So here's 50 plus right here, right? And waited. Um, once price came down here to test this mitigation, and it failed to break below even this here, I knew I was okay. So it broke above, right? I got out on 50 plus, my initial on this accumulation period, but my um, 61057. I'll tell you 1057. Yep, right here, 61057. My exit was 61057. So this was my first exit right here, right around here on this pullback. And then price shot up, another impulse to the upside. Now I'm going to show you what I was thinking, and this is why I had exited here, which I exited out prematurely. But you know, you live and learn. So the reason is because, where was it? Oh, here it is. When I was looking at it in a higher time frame here too. There it is. All right. See this right here? Actually, this right here. This one right here. Okay. Let me show you. Boom, boom. Oh, yeah. Let me do this again. Mm, mm, mm. See this here? This candle right here, right there. This I was expecting a mitigation pullback. I thought this was going to mitigate here and then pull back. Oh, no, sorry, it's not that one. It's this one. Here it is. It's this one here. This mitigation right here. This is why I was calling this my exit, and I kind of violated my own rule. Really that's what I'm going to show you, because see, I was expecting price to mitigate off of this, and then I'll show you like this. So here's a first exit right there. No, I'm sorry, no, it's not that one. Let me leave that there and move this right here. Here was my first exit right here. But this mitigation right here, this here, I had anticipated that price was going to come up, pull back, hit this mitigation, and then pull away and give me more range, more sideways accumulation ranging here. It did not. I should have just stuck with my my thesis, that price was going to break to the upside. But it didn't. Or what I should have done was move my stop loss higher than break even, maybe here, or even here, because on a 5 minute you'll be able to see the depth of a pullback here, this pullback, and then I could have put my stop loss from there, moved it here, right, which would have given me more opportunity to catch this. That's what I'm trying to tell you. That I ended up putting a sell here, and I closed out my buy with the anticipation that this order block would price would mitigate against this order block, and then I was expecting price to give me more of this here, but it did not. It ended up breaking up to the upside on an impulse. So that's what I was trying to show you guys. Why I'm not in the position anymore. Yeah. So the learning lesson is that next time what I'm going to do is drop to the lower time frame, look for the 15 or the 5 minute right here pullback, which is this pullback here. I could have moved my stop here and allowed to anticipate price might break up to the upside rather than getting in a sell. If I was to get into a sell, I should have done what Rob's looking at, which of course was break and retest to the downside. Break and retest would have looked something like this. Boom, boom, and then price would have came up, broke this accumulation, and that'd be the entry right here on this retest.
Did you go in for a sell because of that large order block? You just thought they would keep pushing for sells?
Yeah, that's what I thought. Yeah. That's why. Are you still in this, Rob?
No, I got stopped out. I kept moving my stop loss up, and I got wicked out. Forget the price, but yeah, I got wicked out. I moved it up pretty high.
You did, yeah.
But I got it. Yeah, I got a good run. I got it up to like I'll show you. Let me show you right now. Where is? $63,179. Yeah, so.
Up here, yeah. That was really good.
Yeah, I moved it up.
Yeah. What you want to do is, you see this? This is the slow and steady, right? See how slow and steady rise? Move your stop loss to the lowest part of that order block. Lowest part of the range.
Yeah.
Lowest part of the range.
I just felt like it was about
to drop.
Yeah, I was doing that, and I actually had it there.
Yeah. Oh, you did.
And I thought it was gonna turn around.
Yeah. You're in good profit.
Yes.
But I definitely see what you're probably looking at this, right? This here. Is that what you were looking at?
No. To be honest, I wasn't looking at the order. I wasn't. I just had a feeling it would turn around, like it's going.
Got it.
Hey, Julius.
Yes.
I feel like the market maker's been doing that base pattern a lot.
I didn't even look at that block that you were pointing at.
That you pointed out. They'll come down and make that exact shape.
You mean the slow and steady?
It seems like it's been pretty common.
You mean a slow and
steady?
Where
they'll do like a straightaway breakdown.
Oh.
And then they'll do an initial kind of come up, retest, and then maybe come down for like a third time.
Oh yeah, you're absolutely right. You mean this right here? 1, 2, 3.
Yeah, that's what I'm talking. Yeah, they've been doing that a lot. It seems like
a lot. This seems like a signature move that they're doing now. Yeah.
But how? I mean, how many? Like, at what point are they gonna Is that just gonna be so obvious that they're gonna have to
Okay. Well, That's a great question, and you just hit it, the word in the you used the right word, obvious. I caught the two. We hit three times often. Okay, so there was a stat that I was reading when I first started to trade. It said that 70% of trading is done by bots now, right? And then Vish and Eric, the guys that I'm working with, told me
Right.
90% of trading is now bots. 90% of the movement is now bots. If 90% of the movement is now bots, right? Even with the market maker, and it's just being overseen.
It's just going to be really automatic.
It is. And why is it automatic? Because of the precision to grab at additional stop losses for a third time. If anyone who studied market makers material, Steve used to say this. And remember, his videos are from 2012, right? And he's been teaching the same stuff since like the 2000s, all throughout the 2000s. He often said that if the market maker comes down for a third time, it's because he's greedy. And then he says, "But I got you." What does he mean by that? He means that the market maker's coming back down to grab at stop hunts, and he means I got you because three times is a lot coming down. Because what is a classic pattern?
Yeah.
Is a W pattern. So how can this precision happen so often? How? Hitting it
Hmm.
three times. Only with a bot. That's why. Only with a bot. A bot would do this. So this is the reason why we're seeing this. And that is a great observation you
Hmm.
just made, because this is the same observation that I've been looking at too. You know, you're absolutely right. Three hits. Three hits to the bottom.
Yeah.
Yep. Yep. So these are things we can look forward
Yeah. I
to
mean,
as it continues.
I was playing. I took the weekend. I took the weekend off for some self care.
Mm-hmm. Yeah, yeah, that's
Yeah.
good.
No. I saw it like kind of happening, and I was just not in front of my computer. But I was just off doing a couple fun things.
Yeah, yeah. Well, very
But
cool.
yeah,
Yeah.
good that you recognize that too. Yeah.
Yeah, yeah. I've recognized this early on from way back when price was down here, when price was way down at the bottom. When we were before all this rise that we did, all of it,
At
in
20
and yeah, when it was way way down.
the 28K.
Yeah, yeah,
So
it
that's the first time I saw that.
yeah.
And then they started doing that on lower time frames.
Hmm.
And then when we came and tested 40K, they did a quad
Yeah,
buy.
yeah.
Yeah.
So to see two is really human intervention. Now that we're seeing multiple of two, three, up to five, you know, when we start seeing three or more, this is really it's bots. The precision is so precise. It's calculating, and making decisions on all this data that it could take the risk and grab it quickly without putting itself into jeopardy. That's why, without activating so many buys that he ends up profiting a whole bunch of other people. So they're looking to the market maker has its parameters, which of course is going to be grabbing at stop losses and then managing, trying not to activate buys or sells depending on where it is. And yeah, man, that's good observation. Hmm. So okay, so how does this play into why I got in super deep on my stop loss? This is the reason why. Once I see it for a third time, I don't hesitate to wait for a confirmation candle. I get in literally at the pin. Once it pins it, or gets pretty damn close to the pin and starts pulling away, I will put my order in and then keep a very, very tight stop loss, especially here on the third stop hunt, which it did. Okay. Yeah. Good observation, Aaron. Okay. So let's go to ETH because I know we were looking at question on ETH. Let's see. All right. So All right. On the daily, we broke above this. It's a big deal, right? Breaking BMS that, right? On the 4 hour. So take a look at the ebb and flow of this chart, right? Here it is. This is what your eyes are going to be looking for. Here's one, rise. It's two, rise, pull back. It's three. All right. You guys catch that? One, two, three. All right. So now that we have, because the question was, where is the, let's see. Oh, 34. So which would price come down to the 3,400 on a daily chart, right? Is the 34 right here. This is the pullback. That's a daily. And on the 4 hour, right? So the question is, where's the liquidity? Where is the liquidity? It's a lot of liquidity here, right? See this? It's a lot of liquidity. Impulse to the upside, liquidity again. Right here. Right here. That's the concentration of the liquidity. It's all right here. So this being the liquidity, because we have a new impulse to the upside. This is really deep right here. So for the 3,400, for price to come back down to 3,400, it actually has to basically pull back to this order block, this liquidity, in order for it to grab at this. This would be the first hurdle. So there are this pricing that's going to be protected if price gets down here. And so that being the case, this was where I put the bottom of my FIBs, right here. All right. Again, you could say it's the first order block that created the impulse. So you could find a trading range on a 1 hour chart, right? Here it is right here. Here's the 1 hour chart. We know that this is the ideal, but I'm looking for the order block that created the impulse, this, to find my trading range, right? By the way, this here, this order block that created this impulse, I only do this because this is an observation that I made in back testing, and then it's proven to itself to be very effective to looking for a trading range. That's why I do this, because when my brother was showing me this, he always dropped it here. We never had a conversation on this one. It never even came up. In fact, maybe someday I'll talk to him about it. This is just an observation that I had. So I always put it right here, the order block that created the impulse. This was the last order block that created that impulse. But, for the most part, this is where if I were to be correct, politically correct about it, that's where it should be. But I like to do it like this, because then I have multiple opportunities for it to hit the 50. Oh, of course, no wonder why. Take a look. My brother would have less opportunities, all right? Actually, it's still the same, but I know sometimes if it's only bouncing at the 50, he'd have less, but he's looking for that less because he's also looking at the option. So he's looking, okay, so if it's way down here, right, he'd be able to catch the option really, really cheap. Yeah. But I don't play options, so I just put it right here. Because now it's giving me a lot of opportunities for buy-ins. Buy-in. Buy-in. All right, so the question again on whether or not price would come down to this 34. Price can. It actually can. It realistically can. But as far as where I'm going to place my fib, I put it here inside this range because price has all this liquidity first to deal with before pushing into this liquidity. That's why. So I have my fib here. If price comes down, boom, boom, boom. Price comes down and breaks this order block that created the impulse, which it can, right? I will then move my fib I'll move this fib to the correct location for the 1 hour. So if you notice, I have order block that creates the impulse. I have the correct fib placement. Then I have the 4 hour fib placement. All right. That's it. So in this situation, will price come down here? Yes, it can, but it has to deal with this. So while I'm dealing with this, I'm going to find a trading range because we're still on our bias direction to the upside. So I'm dealing with this liquidity, finding an entry within this range with price coming into the 50 or better in order to find my entry. Okay. And if I see triple lows, triple, 3 hits to the bottom, I'm going to be, I'd be looking for super tight stop loss, and so if price came down to this right here and tested equal lows, I would be looking for a entry on the wick. Don't need a confirmation candle, and I don't need a chart pattern. I just get in on the wick. All right. Any questions on this here? Hey guys, any questions?
No questions, man. That was great.
All right, man. Yeah, I really wanted to cover some more on fibs there. Hope you guys got that.
I got it more than ever. Every time I watch your stuff, I say that.
Yeah, good. A lot of this is repetition, and you guys will get it. You guys will definitely get it. You'll hear it enough times, So, yeah.
I can.
Go ahead.
Sorry, I say I can kick myself because when I look at it in real time,
Yeah.
it isn't as obvious as when you look at it afterwards.
Yes. Yeah.
And I think, like you say, repetition is going to play a big role in getting it right.
Yeah.
I was staring at that bloody those deep candles in the on the between the 0 and the 25 over the weekend.
Mm-hmm.
And I thought to myself, every weekend there's low volume, and it's probably going to pick up on Monday.
Yeah.
And usually when I sleep in New Zealand, I wake up on a Monday morning, something's happened, or a Tuesday morning, and I thought to myself before I went to bed, I thought maybe I should just on that wick just put a buy order in, and just gamble it. And I can kick myself if I didn't, because what you're saying now is sort of confirming that there's a potential risk, but the likelihood of it going further down is not that much.
Yeah.
So I can kick myself for that, but I mean, repetition. I think that's the big thing. Just practice it and get on with it.
Now I'm going to explain something, and I'm going to explain the psychology of building the right habit. This is very, very important because there are going to be a lot of people out there that says, "Oh, you know what? You're only looking at it in the past, so you could see what it's looked like, and that doesn't count because you're not showing it in real time." I'm a discretionary trader, so basically, you see, this is very discretionary. When I start seeing 3 hits to the bottom, literally, it's so impulsive. Do I have time to guide you guys and tell you? I could probably tell you where setups are, and that's what I do with these guys that I'm working with now. When I'm looking for entries, right? I basically tell them, okay, here's a buy. This is what I do when I'm working with the programmers. This is what I do. Okay, see, prices to the upside. I got a 1 hour chart. Prices still moving in its bias direction, and then I tell them, okay, so here's my fib placement, right? And then here's the bottom of the fibs. Now I'm leading up to something, and really I'm leading up to the psychology of building the right habit, which is very, very important. And so this is the accumulation. This is the bottom of the accumulation. This is this is a pretty good three hits to the top. That's really nice. So this is the order block that created this impulse to break BMS this. So we have a break-in market structure right here. This is a structure. These three. This here was the structure that created. That is the impulse that broke this. All right. So let me show you. All right. So and look at that. This is really clean here too. Look at this. 2 hits to the bottom. And you guys know that this is really an SMS, right? Why is that an SMS? Because on the 1 hour chart, right, we are looking at the body. We're going to go from the wick to the body, because on the 1 hour, this is a stop hunt. And it really clearly was a stop hunt because this was a liquidity grab, right? So this was the SMS. This is the break in market structure. Here's the structure that we broke. Here's the break, impulse to the upside. Here's the, now the impulse to the upside, price accumulation, breakout again to the upside. On this breakout here, now I have a place to put my top of my fib. This is the first data point where I start seeing pullback, right? So now that I have my data point, I drop the top of my fib, boom, right there. Now that I have my top of my fib, where's the bottom of the fib? The bottom of my fib, remember there are literally 3 places that I'm putting the bottom of my fib. Number 1, it's going to be the order block that created the impulse to the upside. That did this BMS. This is the impulse. Here's the break-in structure. Oh, I'm sorry, this is the break-in structure. This is the structure we broke. This is the order block that created it. So that's the bottom. That's number 1. Number 2 would be the correct placement of the order block, right there. Okay. Number 3 would be the 4 hour order block. Right now, all I'm dealing with is this. Okay. Because I'm looking for a trading range, 50 or better institutional discount range. So here we are, institutional discount range. And then, so what I was saying was, when I'm working with these guys, take a look. Now I'm asking myself the question, because we start jotting down setups. So here are the setups. This is number 1 right here. I see a order block there. Now, in fact, I'll leave my fib there. You guys smart enough to read between that. I usually remove it with the programmers because they get a little confused. So this would be the top of the order block. But I'm going to further define it. So boom, I got one there, right here, which is this accumulation period. But keep in mind, I also have this order block here, which is the top of the mitigation order block. That's what this is, the break and retest. That's what this mitigation order block is. All right. So if you notice, price can't pull back. So I've got 1, 2. Those are my 2 areas. I also have a price imbalance here. See this? There. You see that? I'll mark it off. It's right there. Right there. It's very subtle, but it's there. So I've got 1, 2, 3 areas. 3 areas of sensitivity where price will react off of. So that's how I do it. I could give setups, but when it comes to entries, I'm really, it's like just super spontaneous, So, but what I'm leading up to is this, right? Um, and I've explained this to a few guys here that um, there was a baseball player that was having some difficulty. So the coach said, okay, grab the bat and stand on the mound and watch the pitch. He stood on the mound and he swung at the ball. And the coach said, no, don't swing. Watch the ball. So he stood there with the bat on his shoulder, watched the ball. Boom. He watched it. Watched it again. Ball came quick. Again. All day he spent watching the ball. He did not hit the ball. He spent watching the ball. What he did was he watched it so much that now the nuances of the ball became slow motion to him because all he kept doing was observing the ball. The following day, the coach said, okay, go back to the mound. This time, hit the ball. He went, and since he spent the whole day watching the ball, watching the ball, watching the ball, day 2, he spent getting ready to hit it. All the nuances of how the ball was being thrown, curving, the slight movements, whether it's in the upper corner, left, right corner, he watched it. He now had an opportunity to gain a sense of intuitiveness on where the ball was going because he watched it so much that now the movement of the ball was slow motion to him. If you notice what he's doing is that he is building the habit of watching the ball so that he could hit it correctly during a reactionary period. This is the importance of backtesting, of looking at the chart the way you would look at it and make a determination in your mind. Okay, I see where this is. I see where it's double bottom. I see the break and retest. I see it. I see where the order blocks are. I see the pullback into the order block, right? I see it. This is the importance of backtesting. My backtesting is 2 steps. Number 1, you need to look back on on a weekly basis and ask yourself, based on the type of entry that I get in on, how many times would I catch the entry? What are we doing? You're really creating a visual map of watching the ball in slow motion. You're literally doing shadow boxing. If you ever watch a fighter, he'll come in, he'll do jab, reverse punch, hook. He'll sidestep. Um, he's moving, but he's not hitting anything, and he's throwing out punches. But he's visualizing as things come to him. But he's really just throwing out. What you're doing when you're back testing and you're looking on a week to week, right? And you're looking for your entries. You are watching the ball in slow motion, so that in real time, when it happens, this movement is slower, so that you've built the habit of seeing where the order blocks are, where the price imbalance is, how far back a pullback will be. You've built the habit of looking at the chart pattern on a small time frame, on a 5-minute, and you've built the habit of looking for the candle pattern develop, so that in real time, you just react. Because you've watched the ball so often, you just react off of it. You're intellectualizing slow motion because you want to be in a relaxed environment when you're back testing. Because when punches are thrown at your face, you want that habit to be so well ingrained that you react. Anyone who's ever shot a gun, people in the military, you train that activity so often that during real time, you just react. And you're reacting with proper habits. This is why it's important to go back and look at your charts and backtest this correctly. It's so important. Because if you don't, you end up building bad habits forward testing in real time. So watch the ball, shadow box, Learn to watch the ball in a controlled, slow environment. Get comfortable with it with your eyes so that when real time happens, you just react. All right. I hope you guys got that and understand the value of it. And anybody that tells you they don't backtest, either bullshitting you or they're not doing well. They're not.
That was really good.
I explain that with a high level of stubbornness because when I first started to trade, I did not backtest at all, and I lost a lot of money, a lot. I also developed bad habits that sometimes today still kick in, sometimes, especially when I start chasing a trade. And then I have to ask, okay, Julius, step back. The only reason why I started to backtest is because my brother drilled it into my head that you better backtest this kid, you better backtest this kid. But when I first started, I ignored everyone. And I thought that trading was like opening a business. You jump into it and you figure it out as you go along. Man, that was the worst thing I could do. Because you know why? I developed bad habits. Bad habits, scalping. That's where I developed bad habits. And I was literally trying to get in on every single movement, and I kept losing money and losing money. And it's the worst way to actually learn how to trade, you know. So you got to do it in a slow, controlled environment. So you build the right habits. So when real time happens, you've built it as a reaction. You can move accordingly, you know. So I tell you that as a real time experience because I went down that path. What it will cost you if all you did was forward tests is money. And what it will potentially cost you is you stepping away from the game because you've accumulated so much loss that loss accumulated to emotional and psychological pain. And then that psychological emotional pain will decrease your ability to be of sound mind and reason, which then will push you to walk away from the game simply because that's human nature. Yeah. So yeah, backtest, guys, backtest. You got to look at this on a weekly time frame. To block off one full week and ask yourself, okay, um, um, ask yourself, how many times could I have caught this entry looking for my setup? And then even better than backtesting and visually looking, write it all down in an Excel sheet. Put it on an Excel sheet, drop it down, and start plotting down your decision making based on it. All right. So, any questions?
I know for me personally, when
Mhm.
I back tested, it really helped clear my indecisiveness when I started trading again.
Yeah, yeah, yep.
Because it was more embedded, and
Mm-hmm.
I didn't second guess myself as much.
Yeah, yeah, yep. So, Mike, I know he's been back testing a lot. So, um, and I'm going to tell you another secret that my observation are those who've taken the time to backtest, because backtesting is it's tedious work. It's very tedious. It's almost like you know there's a point when you first start backtesting where it almost like everything looks the same. Like especially if you're constantly looking for M's and W's, like you see it everywhere, you actually can get a little frustrated trying to look for it. This is why you need a set of tools to function off of. What do I mean? You need a set protocol, a structure within your mind, so that your mind constantly looks at the same stuff. And you guys know this. I started on a daily chart, moved to the 4 hour, moved to the 1 hour. Then I'm looking for an entry on the 5 minute and 15 minute. So what did I do? I basically look for where my trend is on the daily. I drop it to the 4 hour. I'm dropping my fib, waiting for a pullback. From the 4 hour and 1 hour, after I've defined the fib, I'm going to the entry. So if you notice, I went from trend to setup to entry. On the entry, I'm dropping it to the 15 and 5 minute. Now that I find my entry, I'm defining my entry. You could find an entry right here, right? Right there, off of this. It's a double, that's a stop hunt right there. So here's the fib placement, right? rise, break. Let's start from the beginning. Trend to the upside. I'm waiting for everything to come down, pull back. Here's rise, break and mark structure, impulse. Gonna move my, here's the fib, bottom of the fib. Here's the impulse. Here's my pullback. Here's my pullback. Here's my entry. Here's my entry. And you guys know my exit, 50 plus, 5-minute chart, waiting, reading, higher lows, higher lows, higher lows. So could you catch this for a sell counter trade? Yes, you can. You've got to train yourself to do it. You got to train yourself to do it. I will tell you that on a scale of 100%, I'm 80% secure with my ability to trade with trend right here. And I'm 20% confident I'm looking for the pullback and counter trading. That's how I trade, right? Although I will tell you that I mentioned this to you before, that there's some people are so gifted that they'll come out of the gate and start doing sells on the upside and the downside. And I have yet about maybe 2 weeks ago I wrote that down, that or maybe I might have said it, that I've never met someone, but I believe that someone out there exists. Because abilities come in many forms. Kind of like I'm not born to do hurdle jump, right? I'm not designed that way, but I know someone in this world is a high class performer at hurdle jumping. So I believe that in trading, the same thing, that someone literally, based on their life experience, how they were born, and how they actually think, has the ability to trade tops, bottoms, can easily see movements going from all this, that this person could have caught this, all these here, these here, and could have caught this. And I believe I've met someone who actually could do this. Yeah. Which is really cool, because I knew someone like this could exist, but it was a matter of who is that person, and I've met that person who can catch all this. Yeah. But since I know that my brain takes a certain amount of study in order to get something, right? That my comfort level is trading with the trend, because I don't want to accumulate losses. I don't want to accumulate so many losses that I end up creating injury to myself emotionally and psychologically. Yeah. And also my account. I don't want to decrease on my account. Okay, guys. Any questions on stuff we've covered? No? So what have we done? We've done a lot of fibs. We've talked about also 3 hits to the bottom, which of course is 3 stop hunts. That third stop hunt, I don't hesitate and I don't wait for chart pattern, candle pattern. I literally enter in at the wick, boom. Why? Because I have a super tight stop loss. Also talked a little bit about the importance of back testing, and to train the muscle of watching the ball in slow motion. That's what you're doing. When you're back testing, you're watching the ball in slow motion, because you're picking up the nuances of that ball. And you can only pick up those nuances of the ball in slow motion, in a relaxed environment, because you can't catch those nuances while hitting. You can, but it's going to be a lot of hits. But in the trading game, your hits will be potential losses. So to improve on your trading, shadow box, watch the ball in slow motion. Go back and ask yourself, how often does this pattern play out this week? Last week, how often did it hit? How often did the pattern hit the week before? You want to ask yourself that, and you want to jot it down. Day trend, drop it to the 4-hour, 1 hour. Look for your fib placement. Drop it, which is your setup. Drop it to the 15 and 5 for your entry, and then count your pips. How much money would you have made based on 50 plus? Not only count the pips, but watch it on the 5-minute. What are you seeing? Is price going lower, high, lower, high? Are the tools you're looking to exit on your first exit, once it's 50 plus, are you using the same tools at a fractal level on the 5 minute? Are you waiting for that engulfing reversal candle for your first exit? Because the tools that you use for your entry will still be the same tools you use for your exit. And you want to exit with profit. You want to. All right. So again, watch the ball in slow motion, back test, improve on your psychology. So important. So in real time, all you do is react. All right. So that's what we covered. Any questions? Just ask away on the
Thanks, Julius.
on
Hey,
the thing.
just
Uh-huh.
thanks for yeah. I mean, that was really awesome. I mean, just the
It's good.
analogies and the mental side of things as well. I mean, that's just good to hear it from someone and have it broken down like that. Just makes a lot of sense.
Yeah.
Like that. If I could maybe just ask a question, I think you explained it really well, but I missed maybe a little bit of it. When you went back to like catching the wick on the 1 hour stop hunt on previous stop hunts on the 1 hour.
Yeah.
When you catch the entry on the wick,
Uh-huh.
and you're looking for the order block on the 5 minute and the 15 minute.
Yep.
So let's say you catch the wick. When you place your stop loss,
Uh-huh.
would you place that at the time of entering the trade, or would you enter the trade without the stop loss and then feel it out and then see where you kind of exit, or if it does turn bad, then you start to look for an exit? I don't know if that made sense.
So are you asking if I do manual stop losses or actual automatic stop losses? Is that what you're asking?
So like when you so let's say we're looking for an entry on a stop hunt on the 1 hour.
Mm-hmm.
When you enter the trade, so let's say you enter
like
the
right
trade.
here. Yep. Let me go to the 1 hour. Like entering right here off of this 1 hour, or entering on this.
Or if you go back even a bit more, like where you mentioned with so we're basically looking for the stop hunt on the way back. We're looking where that order block is going to be.
This here. Yep.
Yeah. So if we're going to there and we identify that as a stop hunt, then we drop down to the 5 minute and the 15 minute to see the order block. Is that correct? And then essentially we're waiting for a wick inside that order block to get an entry. And then as soon as we do have that entry, then our stop loss would then be just below the order block, or with that, we would just enter the trade without the stop loss and then feel or kind of see where the trade goes.
Okay.
And if you do need to.
Yep. These are two observations. If you notice, see this stop hunt right here, right there, right?
Yeah.
There's no order block here on the 1 hour. And this order block has already been repaired. That's what they call it. These guys, they call it repaired. So that's already been repaired. So this is no longer relevant, this order block. This is now relevant because we have a stop hunt. So now the question is, if I drop it to the 15 minute, will I see an order block inside there? And again, no order block inside here. So the only significance that I have is test of equal lows. All right.
Gotcha. Yeah.
All right. So, but let me. This Bitstamp has the craziest chart. It's just so inconsistent. So let me just kind of walk you through this really quick here. Hold on a moment. I see what you're saying. You're basically okay. So you see this right here, right? This was the right there. This is the low that I was paying attention to, because once price came here, I said, that's interesting. Didn't break it. Hit it again, second time. Then third time, it was clearly a stop hunt. This was a stop hunt, right? And it, did not have a very clean. In fact, you see, let's right to the wick. Boom. Okay. So really, this is a stop hunt. All this action in here Okay, see it? Wick, wick, and then he hit it again. So I said, So if I were to look for order blocks in here, I don't see any. There's no clear order blocks on the 15. No clear order blocks. So there's no clear order blocks here. The only thing I was dealing with was equal lows, right? So on the equal highs or equal lows, you're looking for the if price closes below, and in this
Gotcha.
it doesn't. But there's no relevance to order blocks here because we don't have any, and I typically don't like to look at 5-minute order blocks. So as price was coming down, because now I'm questioning, okay, where's the order block that it would basically slow down to? There is no order block here, right? There's no order block here. We have no order block here, right? None there. This here, we have a no order block here. And again, we're looking at the 15 minute no order block. We have this order block here, this mitigation right here. This is a mitigation order block, right? It's inside. It's not on this, within this impulse. It's on the inside, right? So that's what we were dealing with there. So that was repaired. But as we were continuing going down, there was no clear order block. So the only thing I had that I was relying on for an entry was not an order block, but equal lows. All right. That answer your question?
Yeah, I think, that definitely, definitely, I think so.
Okay.
Maybe another question as well. I think you mentioned something I guess on entering, like with equal lows, entering on the equal lows, without waiting for candle confirmation. So yeah, I mean, let's say you enter the equal lows without the candle confirmation, you're essentially entering on the wick. Would your stop loss then be, how far down would that be if it's
I follow you.
Where would you identify it to be?
It would, so I could have put a stop loss right here, right there. But I actually just put it here. The reason why, in this case, is because this was a stop on here, and it went. But this red is the very bottom of this right here, right? This horizontal line.
So you would wait for that candle to close before entering.
This red candle here.
The one next to it.
Oh,
or the
no.
other, yeah.
I actually I didn't enter it in here. My entry was not here. My entry was here. Once I seen this SMS.
Gotcha. Yeah.
Okay. And then if you remember, my entry was like 601. So it was here within this. Here's my phone.
With those, the previous two touch points on the support line, would you have gone for entries based on the wicks and just,
give me a second here.
Oh yeah.
I get all these messages.
I think you covered it, but I just wanted to go back to it because, yeah.
So my entry would be based. It was after this candle, because remember see this hammer, that was another stop hunt. So if you notice, right, you could have gotten in here, right, especially this here. This would have been a great entry here. At once price came down into this, pulled back. But when I was looking at my phone, this is what I caught. But I would have caught this too. I would have definitely caught if I was looking at my phone, But I wasn't. At the time this happened, I wasn't. Price was here, and as it continued to push down, I said, okay, well, he's not coming down. He's just testing for equal lows. This was clearly a stop hunt. He's not going to go below this. So as soon as this candle closed, boom, that was my entry. So it was literally like right there.
Mm. How would you like if you go back just a couple candles before that? There is a wick, or there's a candle that almost gets to the support line. Yeah, just there.
Oh, this one right here.
Yeah.
You know, okay. I acquired losses getting in on this, catching this.
Mm.
I acquired losses getting in on this. Yeah. Um, and my losses are real small. Let's go to the 5 minute. I don't remember which ones. Let me just mark this off and let's just look at it, okay?
Because it almost like in real time that would seem like an SMS almost.
Yeah.
But then I also feel like I guess my experience and skill with identifying the candles could still improve quite a bit, I think. So I think in that aspect, I'm still kind of learning and working on that as well.
Yeah. So
But that,
you're looking at SMS off of this.
yeah, that would have
Yeah.
almost seemed like an SMS in real time with the long wick. It seems like a hammer.
Yeah.
With a golfing next to it, but then golfing has a really long wick on the top, which almost, I don't know how to how that would be defined, but
Yeah. So, you know, because of this, all right, when you're learning, I knew that to preserve myself emotionally and psychologically, I needed to develop the best setup and entry for myself. While you're still learning to catch this, I would recommend you do what Rob did, which was catch the break and retest off of a 5 minute chart.
gotcha.
See, look what happened. Clear W pattern, switch in market structure, break, retest. Got it?
Got it.
Now,
Nice.
if you miss this, rise. There's another retest mitigating this. See it? And okay, so what I had learned is that there's gosh, yeah, I forgot her name. It's been a while. There's a woman in Australia. I think she's from Australia. She has a, I don't know if I remember. I'd have to find it. She's either Australian or English. She has an accent. Anyways, this woman taught oh, that was weird. The psychology of trading. And this helped me out a lot. She said you're either going to be natural at looking for W's or natural at trend trading. And it's important that you identify whether you are a trend trader or a reversal trader. You're either a reversal trader or a trend trader. How will you know? Natural, that's what I'm talking about. Natural tendency. You will know because your failures will tell you, number one. So wherever you have lost money or lost trades, wherever you have gained money, gained trades. And then I realized, oh, so I am a natural trend trader. Since I was a natural trend trader, I also knew what emotional psychological injuries do, just like physical injuries. Old person turns 90 years old, he's lived a lifetime of being athletic, he's got old injuries. He's in constant pain. That's why he hunches over, fingers are all in this formation. Why? Injuries, you know. And because of those injuries, he's probably a little bitter, you know. Not bitter about life, but every day he wakes up, he's a little crabby. Why? Because the dude's in pain. Pain decreases someone's ability to be of sound mind and reason. So I knew that if I stick to this, being a trend trader, that I will constantly be of sound mind and sound reason. I have to wait for this to happen. in order to find these entries. I have to literally be patient and wait. And for someone who's so used to scalping in the past, this was challenging for me. But why did I do this? Because I knew that I could not accumulate a series of losses that would make me commit a departure from the game. That I had to win, 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 build the muscle of winning to a point where now I'm confident of this particular setup, that I can go out and play with different other setups and have a mixed bag of tools for setups. But you want to get good at this. There's only one reason why I stress being good at either trend trading or this, is because it's to protect yourself psychologically. That's why. The 9 people that I first started trading with, they all left except one. And the other dude, yeah. Yeah. So, uh, and the one that was still in it, he was a master scalper. But he couldn't. He was a natural at scalping. It was a very intuitive thing. He couldn't even teach scalping. I asked him to many, many times. He could not teach it. It was something he visually seen. It was so spontaneous that he just jumped in, and next thing he was making money. You know, and some people are like that. Remember I explained to you that I've met someone for the first time who actually is good at this, trend trading, and good at reversals? I finally met that person. Yeah, finally met that person. He's got a very high IQ. Very, very high IQ. Yeah. So he has the ability to manage a lot of data and make decisions very quickly at that, based on this data.
Wow.
I'm not, and I don't even know if that's the right tool. If having an IQ is the right tool. I think it's a combination of the way he sees the world and having a high ability to manage a lot of data naturally. This is the first time that I met someone like that. I knew that someone existed like that. It's kind of like the only a handful of people in the world could actually be like high class athletes, you know, where things just come natural and they just need certain things and certain motor skills they develop, and they end up becoming superstars out the gate. Yeah. So find what you're good at. Know your psychology. Trade your psychology. When you're good at this and you are winning, then you can come back and play with this. But I will tell you that my habits, because of how I've reinforced myself, I got in on here. I don't remember which ones, but just like you said, see that um, you could find it. You make a case to find an entry here because of this SMS. But remember the rule that I set for myself. I have 3 losses in a row. I will wait. I will wait, wait, wait. What am I waiting for? Break and retest. But in this case here, I only acquired 2 losses. So after the 2 losses, I seen this SMS, and then I was like, oh, what? It's great. I see it. Boom. Enter in. All right. All right. So I hope that helps. The thing that helped me a lot was my 3 trade rule. Because look, take a look. I could have found an entry. Let's actually look. I could have found an entry here off of this engulfing, right? Here's another engulfing. Here's another engulfing. Yeah, we already got that one. Oh, here's a 3-bar swing. Right? You are 50 or better. This is why sometimes I get in on the 30-minute, just like I used to do with gold. Why? Because I know that's the highest 30-minute and 1 hour is the highest high time frame, that pretty secure. They're only going to go one way. So take a look at this. If I had gone in on this on the 30-minute, right? I would reduce the 5-minute and look for my order block for my exit. Okay. So my exit would be here. it's a very, very tight stop loss. This is the reason why I have stop losses underneath order blocks, and I let them execute because I'd rather have a $200 loss, $300 loss than I'd rather have a loss here, right, than have a loss here. Because the difference between this and this is probably $800. Now you do that 3 times, you're at 2,400 negative. You know, so yeah, exits based on 5-minute order blocks. All right, keep your losses at a minimum. You will acquire losses; it's just part of the game. But the money management is going to be the reason why you keep your account alive and kicking. All right. Any questions? Anything else? We got you covered.
Yeah, that was awesome. Thanks for that.
Yeah, you bet. So, you know, in hindsight, and ask yourself where you are as far as psychologically. Are you a trend trader? And if that's the case, and I find that trend trading is the easiest for most people. If that's the case, look for entries on trends. Okay, learn to read it on the 15 and 5-minute break and retest. Look for those setups. Okay. Wait for the SMS, wait for the break in market structure, pull back, find your entry, drop your stop loss on the 5-minute just underneath your nearest order block. All right. All right, guys. I've got a 6:52. Gonna run. Any other questions? Just post. I hope you guys learned a lot here. All right.
Hey, much appreciated, Julius.
Thanks,
Yeah,
Julie.
you bet. Absolutely. All right, guys.
Thank you, Julia.
Yep,
Cheers,
you bet.
bye.
Yep, you bet.
Cheers, mate.
Hey,
See ya.
have a good evening, guys. Yep.
You too.
Bye, guys.
See you, mate.
Thanks.